How will Korea transition to a greener, more sustainable business? That and more on Korea Technology Weekly. Hi, I'm your host, Dr. J.R. Reagan. In this episode, we'll be discussing South Korea's transition to a greener, more sustainable business as investors increasingly take account of environmental, social, and governance, or ESG factors. Major South Korean companies across industries are accelerating their transition to a greener, more sustainable business as investors evaluate their strategic ESG initiatives. ESG investing focuses on companies that support environmental protection, social justice, and ethical management practices. Among the criteria, climate change has become a defining factor in companies' long-term prospects, with a significant reallocation of capital happening a lot sooner than expected. Dutch pension fund APG, one of the world's largest pension investors, sold its stake in the state-run Korea Electric Power Corp, or KEPCO, last year after the company approved the construction of new coal-fired power plants in Indonesia and Vietnam despite its opposition. In response to growing pressure from investors, KEPCO said that it has no plans to build coal power projects abroad in the future once ongoing projects are completed. Market watchers said the nation's biggest greenhouse-emitting industries will face rising calls to align their business strategies to meet emission goals and have sustainable business operations. While ESG in the past drew attention from institutional investors as a way of ethical investment, sustainability has actually been affecting returns in the clean energy sectors amid the COVID-19 pandemic. As investing in eco-friendly stocks and funds has become the latest investment trend, Korean companies across industries are exploring ways to go greener and cleaner through innovative technologies. POSCO, the world's fifth largest steel maker by output, developed plans to produce steel with hydrogen instead of coal as part of its transition to renewable energy sources. The steelmaker's ultimate goal is to go carbon neutral by completing a hydrogen production capacity of 5 million tons by 2050 and achieving 30 trillion Korean won, which is about US 26 billion US dollars, in hydrogen sales. Shipbuilders are also expanding investment in eco-friendly vessels, as the International Maritime Organization last year adopted a new limit on sulfur content in fuel oil to improve air quality. Hyundai Heavy Industries, the world's largest shipbuilder, said it will invest 1 trillion Korean won over the next 4 years to develop eco-friendly fuel and vessel technology. Automakers are also in a rush to bring in new fleets of zero-emission vehicles under tighter environmental regulations and capture a bigger share of the growing market. Hyundai Motor Group said it will stop selling internal combustion engine cars in major markets, including the United States, Europe, and China, after 2040. Instead, the automotive group aims to sell 1 million EVs or electric vehicles across Hyundai Motor, Kia, and Genesis models by 2025 to have up to a 10% share of the global EV market. As the automotive industry moves towards the electric future, battery suppliers are allocating more resources to expand their production capabilities. SK Innovation, the oil refining and battery making unit of SK Group, is turning its focus from its mainstay petrochemical business to EV batteries to capitalize on the new megatrend. After reporting an operating loss of 2.6 trillion Korean won in 2020 due to heavy losses in the refinery business, SK Innovation announced plans to invest 1.3 trillion Korean won to build a third battery factory in Hungary to tap deeper into the European market. Most recently, the company said it will sell its entire stake in U.S. shale oil mines to a Texas-based glycerin company as part of its business reorganization strategy. Some companies even cut ties with businesses considered immoral to get rid of potential obstacles in doing business globally and securing investment. Hanwha Corporation, a defense unit under chemical and energy conglomerate Hanwha Group, said it sold stakes in its cluster bomb business in a move to conform with ESG standards. Some European countries ban investment in companies making controversial weapons, and Hanwha Corporation was blacklisted for its cluster bomb business, which could potentially impact renewable businesses by Hanwha subsidiaries. Joining the global trend, some institutional investors are putting more value in the ESG investment strategy as a way to reduce risks by weeding out companies that fail to meet international standards. Korea Investment Corporation, the nation's sovereign wealth fund with 200 trillion Korean won of assets under management, said it will incorporate more ESG metrics into its investment process and double the amount of investment dedicated to the ESG fund this year. Korea Investment Corp, or KIC, will make internal ESG investment guidelines to exclude companies from the portfolio if they fail to meet the standards. While the social responsibility and governance metrics haven't been considered high priorities compared with environmental factors, observers say large conglomerates will face growing calls to have a sustainable business model under tightening financial regulations and upcoming ESG disclosure rules. South Korea's financial authorities have recently unveiled a comprehensive policy framework that obligates listed firms to disclose corporate information on investment activities related to environmental, social, and governance standards, so-called ESG, in phases. Under the envisioned scheme jointly released by the Policy-Making Financial Services Commission, the market watchdog Financial Supervisory Service, and the country's sole bourse operator, Korea Exchange, companies listed on the benchmark KOSPI with total assets valued over 2 trillion Korean won or $1.8 billion or more requested to release their ESG data from 2025 until 2030, when the requirement will be expanded to all listed companies. The data subject for disclosure includes response plans for environmental crises such as COVID-19, efforts to improve labor management relations, and a governance structure based on transparency. In the meantime, the KRX will encourage voluntary disclosure of ESG data to listed companies by publishing guidelines and suggesting cases overseas. Meanwhile, the FSC has also pledged to reduce the amount of corporate information that the listed companies are required to publish in their quarterly reports by up to 40%. Responding to a retail stock influx that recently pushed the benchmark KOSPI above 3,000 points, the authority also vowed to publish a guidebook for retail investors on how to read business reports, including a glossary of technical terms, including ESG. The growing demand for responsible investing options is reshaping the capital market landscape in South Korea, as financial products associated with the environmental, social, and governance factors are showing fast-paced growth. ESG investment in South Korea is a growing trend, but has been carried out mostly by public funds. The state-run National Pension Service accounted for nearly 90% of total ESG transactions in the country. The sharp upsurge in both supply and demand, on the other hand, highlights the lack of a system to ensure that companies allocate the proceeds of their green bonds or social bonds as promised, and the ESG-labeled equity funds differentiate themselves from mutual funds that invest in large-cap value stock portfolios in terms of their level of ESG commitment. Experts have called for a concerted effort by ESG-aware capital market players, investors, and regulators to keep their sustainable investing and fundraising activities in check and foster an ESG-inclusive ecosystem. Otherwise, sustainable investing will likely remain distant and elusive for both financiers and investment targets. Additionally, Korea's recent Green New Deal initiative, coupled with the nation's pledge to go carbon neutral by October 2020, is adding fuel to the ESG drive in the domestic financial market, allowing more asset management firms to churn out ESG-related products for retail investors to shore up digital and eco-friendly infrastructure. Funds built on ESG themes have been attracting a lot of Korean investors as the country continues to grapple with the coronavirus pandemic. Korean investors poured roughly 1.63 trillion Korean won, which is about $1.44 billion in 42 ESG funds as of March of this year. The funds captured 522 billion Korean won of net new money from investors so far this year. ESG investing is booming not only for Korea but overseas as well. Global ESG funds captured $51 billion of net new money from investors in 2020. That is a new record and double the previous year when the flows were some $21.4 billion. In Korea, young people play a critical role in boosting ESG investments. Young Koreans these days don't always make investments in companies just because they generate large profits. They are likely to put a great importance on how they earn money, penalizing those who fail to meet their social ESG responsibilities. A new green movement as Korea transitions to a greener, more sustainable business. That's all for this week's show. Follow me on Twitter or LinkedIn at Idea Explorer or my website ideaexplorer.com. Feel free to leave comments or suggestions about the show and tune in next week for more news and trends about Korea technology.